Good morning and welcome to the fourth meeting of the Public Audit and Post-Legislative Scrutiny Committee in 2021. Agenda item 1 is decision on taking business in private. I'm going to assume that everyone agrees unless a member indicates otherwise. Members have agreed to take items 3, 4 and 5 in private. Agenda item 2 is administration of Scottish Income Tax 2019-20. I'd like to welcome to the meeting this morning Stephen Boyle, Auditor General for Scotland, Mark Taylor, Audit Director, Audit Scotland, Gareth Davies, Comptroller and Auditor General, and Darren Stewart, Director, Financial Audit of the National Audit Office. I understand that both the Comptroller and Auditor General for Scotland will be making brief opening statements, and I'd like to first invite the Comptroller and Auditor General to do so.
Thank you very much and good morning. This is my first meeting of this type with the committee, and thank you for the invitation to give evidence this morning. Last year would have been my first meeting, but we had to deal with that by correspondence given the outbreak of the pandemic, so I'm very pleased to be here. As the committee is aware, this is a regular annual report that I'm required to produce as part of my audit of HMRC, and specifically to give assurance in 3 key areas on the calculation of the Scottish income tax. And I'd just like to briefly remind the committee of the 3 areas that my report covers. It's the outturn for 2018-19, so the actual figure for that year that's been calculated, the HMRC's estimate for the following year for 19-20. We also look at the rules and procedures in place to administer the tax system as it affects the calculation of the Scottish income tax level. And then finally, we look at the costs recharged by HMRC to the Scottish Government under the service level agreement. So our report sets out our findings in those areas. And just very briefly, in terms of the outturn and estimate, the methodologies have remained broadly the same as the previous year. And I've concluded that both of those figures are fairly stated on the basis of my audit work. And as I've set out in there, clearly with everything that we're looking at the moment, the impact of COVID-19 is a significant factor. The impact on the 18-19 outturn is not surprisingly very limited given the timing of the pandemic in spring 2020, but it is a relevant matter to consider. So I've explained how the estimate has been adjusted to a small extent for 19-20 to reflect COVID-19 impact, but it will clearly be much more important for the 19-20 outturn and the 2021 estimates. And so that's a matter I'm sure the committee will want to return to. Just finally, by way of opening comments, my team and I work closely with the Auditor General for Scotland as we have in previous years, and I'm grateful for his team's cooperation with mine and their further work that they've reported to the committee today. Thank you.
Thank you very much indeed. Stephen Boyle, Auditor General for Scotland, can I invite you to make your opening statement now, please?
Thank you, Convener. Good morning. Scottish income tax remains a key part of the package of new financial powers implemented as a result of the 2012 and 2016 Scotland Acts. The purpose of today's session is to look at the auditing of Scottish income tax. The reports which the committee has before it relate to 2019. This was the 3rd year in which the full amount of tax collected by HMRC is payable to the Scottish Government. It's also the 2nd year that HMRC has published Scottish income tax outturn in its accounts. These outturn figures relate to 2018-19, and the difference between actual UK and Scottish tax outturns and the amounts forecasted at the time are adjusted through the 21-22 budget, known as a budget reconciliation. The reconciliation for 18-19 Scottish income tax outturns results in a reduction to the 21-22 budget of £309 million. In 21-22, the Scottish Government plans to borrow £319 million to cover the forecast errors arising from Scottish income tax and social security reconciliations. HMRC's annual accounts also include an estimate of Scottish income tax for 2019-20, but this does not affect the Scottish budget. I similarly welcome the improvements to the methodology used to make these estimates. Convener, given the ongoing pressures of COVID-19 that will put on Scottish budgets, it's important that the methodology is kept under review as more data becomes available. HMRC collects and administers Scottish income tax as part of the UK's overall income tax system. As the Controller and Auditor General has noted, the NAO audits HMRC's accounts, and the CNAG is responsible for reporting to the Scottish Parliament on HMRC's administration of Scottish income tax. I report to this committee to provide additional assurance on the NAO's audit work in line with the recommendation made by the Public Audit Committee in 2014. I also explain what the findings mean for the Scottish budget. In summary, my report says that I'm satisfied with the NAO's audit approach, that it was reasonable and covered the key audit risks. I'm also satisfied that the findings and conclusions of the CNAG's report are reasonably based. The CNAG has concluded that the outturn on Scottish income tax was fairly stated, and this provides the Scottish Parliament with valuable assurance over this aspect of the Scottish budget. Convener, I'm delighted that the CNAG and his colleague Darren Stewart have been able to join us this morning. As the CNAG has noted, we work closely with our colleagues in the NAO, and my colleague who's with us today, Mark Taylor, leads in this work for Audit Scotland. We'll do our best as our to answer the committee's questions this morning.
Thank you very much indeed, Auditor General, to both of you for your statements. I'm going to ask Colin Beattie to open questioning for the committee.
Thank you, Convener. I'm looking at the Controller and Auditor General's report, and I'm looking particularly at the impact of COVID-19. Now, I noticed that in 2018-19, an estimated reduction of £7 million has been put in place. For 2019-20, 25 million. 2020-21, it's as yet not determined. Now, in paragraph 9 of the report, it says the impact of COVID-19 on future returns for 2019-20 and 2020-21 is yet to be determined. And yet in the paragraph previous, they're making the HMRC are making an allowance for £25 million for 2019-20. Where did they manage to get that figure from if the impact's not yet been determined?
Thank you. If I answer initially, I'll invite my colleague Darren Stewart to add based on his detailed audit work. Essentially, here we're talking about the stage at which these estimates have been developed. So the very small amount for 18-19 relates essentially to the collectability of the outstanding debt there, because obviously the tax due is from well before the pandemic started. 19-20, if we remember the pandemic taking hold in February and March of 2020, it affects the very end of the tax year, and so obviously a slightly bigger impact, but still most of the tax due had been properly calculated and quite a lot of it collected by then. So the 25 million is an initial estimate at this stage of the pandemic impact for that year. Clearly, much more is going to be known by the time that becomes the outturn figure for 19-20, and our report next year will audit the calculation of that outturn figure, and we'll be able to give you much more detail on how the estimate for the COVID-19 impact has been updated for that outturn. But Darren, maybe I could ask you to add to that, please.
Thanks, Gareth. I think you've actually captured the key points. I think the things I would want to draw the committee's attention to, as Gareth has said, that the impact on 2018-19 and 2019-20, given the timing of the pandemic, are really adjustments to reflect the possible issues around recoverability of income tax debt that was due at that point in time. And if I could just give you the context or give you the overall UK context. So HMRC made a similar adjustment in its 2019-20 accounts, looking at the collectability of tax revenues across the board, including income tax, and made an adjustment in those accounts on a similar basis to reflect the fact that the pandemic will have an impact on businesses and individuals and potential financial hardship, and that might ultimately result in those tax debts not being recovered. That's what those adjustments do.
It just seems strange that, having said that there's 2 particular years that can't be determined, they then make an allowance against one of the years. It just seems a bit anomalous. Can I ask, on paragraph 12, there's reference made to the need for behavioural analysis. Will that be for the account of the Scottish Government or HMRC?
Well, at the moment, in the sense that we mean it in the report, it's HMRC. So this is essentially HMRC understanding taxpayer behaviour. That's what we're talking about here, and particularly keeping a close eye on whether any incentives develop for people to manipulate their address, for example. I think is one of the key areas that we're talking about here, in order to avoid differential tax rates across the 2 countries. And so HMRC spends quite a lot of time trying to understand taxpayer behaviour, how new risks to tax collection are arising, and using that information to target its compliance activity. So essentially what we're saying is we're saying that HMRC will need to maintain its understanding of taxpayer behaviour, particularly if it spots any changes in that behaviour, because it might need to refocus its compliance activity. But that's the reference in the report.
So that's a UK-wide analysis rather than something specific to identifying any behavioural changes in Scotland?
It's a UK-wide programme of work, but essentially what we're saying there is that because at the moment most of the compliance activity is based on a UK set of assumptions, but we're just noting the importance of HMRC maintaining a view on whether a Scotland-specific risk emerges to the collection of revenue, and adjusting its work accordingly. At the moment, it isn't doing that. I mean, we've set out in the report some of the Scotland-specific activity that they do carry out, but that's not in this behavioural territory at the moment.
On paragraph 1.7, bullet point 1, there's reference made to sensitive records which are not accessed by HMRC to calculate Scottish income tax. What are these sensitive records?
Could I ask Darren to comment on that, please?
So I think in the context of the estimates, the numbers are relatively small, and I think, and we can write the committee to provide absolute clarification on this, but I think this is a reference to the access to those who complete the modelling and estimates work, not having, or not, not requiring access to the substantive evidence which supports those taxpayer records.
I think it would be useful for the committee to understand that, because we don't know the dimensions of what these sensitive records are or the impact on the calculations being made. Now, we also talk about the proportion of Scottish share of tax, and the adjusted Scottish share is 6.9. Obviously there's a huge disparity between the number of top-level taxpayers in Scotland and the number of top-level taxpayers south of the border, particularly a distortion around London and the City of London, which I think affects everything. Now, given that you estimate 6.9% of the total tax take, this is income tax, of course, of the UK is 6.9%, I would like to understand a little bit better how HMRC model that. How do they allow for the fact, and I'm thinking here from memory, that there's something like 300,000 top-rate taxpayers in England and Wales, and only something like 13,000 in Scotland. It's a huge disparity. And how do they actually work that through? How do they make that come down to that 6.9 figure?
Well, I think the core process is identifying Scottish taxpayers by address. That's the way in which both the outturn and the estimate are built up. And so, provided that that address data is accurate, it will capture the taxpayer and therefore the rates they should be paying accurately. And it's the quality and accuracy of that database that helps drive these figures. And out of that will come the proportion of high rate taxpayers. Now, of course, there are, as far as the estimate's concerned, there are percentage calculations applied to the UK-wide figures. And I'll invite Darren to comment on the estimate side of that question.
Thanks, Gareth. So I think what you've touched on is one of the matters that we draw out in the report around the limitations of the estimation methodology, actually. So the basis upon which it is prepared for the financial reporting purposes. I think the Auditor General Scotland's opening remarks were quite helpful in this respect, that just reminding ourselves that the estimate that HMRC produces is purely for financial reporting purposes. It's the Scottish budget informed by the work of the Scottish Fiscal Commission, which actually has a monetary impact on outturn. But if we take the estimate and the basis for that being the survey of personal incomes, I think it is right to say that there is a skewing impact of higher rate taxpayers in the rest of the UK versus Scotland, and that is one of the limitations of the approach. I think in the written evidence that we provided off the back of our 2018-19 report pointed to some analysis that the OBR had done around the impact of those assumptions, and they drew a similar conclusion. I guess the other thing I would say is that one of the points the committee has quite rightly made in the past is around using outturn data as it becomes available to refine the estimate over time, and that is one of the ways that HMRC seeks to address the skewing effect by. We may come on to this in a moment, but by including a calibration adjustment which takes historical experience and applies that to the current year forecast, which does in the round take effect of that skewing impact.
Mind you, this calibration's not working too well. Perhaps one final question on this is in paragraphs 1.22 and 1.23, there's reference made to the obvious the adjustment in the 2019-20 provisional estimate, which resulted in a reduction of £300 million. That's a 2.3% differential. And that 2.3%, when you're talking about the money we are, can be a lot of money. But what worries me is in paragraph 1.23, bullet point 2, they don't understand why. So what I'm saying is this calibration got a fundamental flaw in it? Because twice now it has failed to be validated. And now they're saying they don't fully understand why the 2018-19 overestimate came about. How confident can we be going forward into the future?
So I think there's something about... Sorry, Gareth.
I'll come in after.
So I guess two or three things to say. Yes. So it's right to point out that in the context of the Scottish budget, these are significant numbers. I think that's absolutely right. I think the calibration adjustment, because it's quite a simple process of comparing historical experience and applying that to current year estimate, which inherently assumes that the level of overestimation in the past will be present in the same way in the future. So in that respect, it's relatively crude. I guess in terms of direction of travel, whilst the numbers are still clearly very significant, the level of error, the difference between HMRC's estimate and then the outturn when it comes to producing it, is reducing over time. But there is absolutely a point there around is it reducing and narrowing that gap sufficiently? I think in the context of our audit, the 0.9% difference between the 2018-19 estimate and outturn are within the kind of reasonable tolerances we would expect. And that's purely from an audit perspective, but clearly the monetary sums are still incredibly significant.
Add to that,
okay.
Lee. I'd just like to add a comment to that, which is clearly if this sequence of differences is always in the same direction as it has been in the last 2 years, and if that continues, that's suggesting an underlying problem that isn't just normal variation you would expect from an estimate. So we would expect HMRC to be paying attention to that and assessing whether there's, as I think your question was suggesting there might be, is there something more systematic here rather than just random differences from estimates? And so it's really important that we keep an eye on that.
you. Thank you, Mayor.
Okay, Stephen Boyle, Auditor General.
Thank you, Convener. Actually, I just wanted to expand very briefly, if I may, on Mr. Beattie's point about the impact of the tax gap and the volatility that we're currently experiencing, and just to draw to the committee's attention in our additional assurance report, paragraph 38, really the impact for the Scottish Government to think about what the compliance risks, and really recognising that it's not identified as a risk currently, or not one that's seen manifest, but as the differences in the tax systems within Scotland and the rest of the UK diverge, is that risk may yet crystallise, and consideration for the Scottish Government to take about what further steps in discussion with HMRC it might want to undertake, and note in particular the recommendation from the UK Public Accounts Committee for a Scotland-specific tax gap analysis, which may help further understanding of some of those compliance risks around taxpayer behaviour.
Okay. Does anyone else would like to come in on that point? Okay. Graham, Colin, Beattie, is that all your questions?
I have one more question, Convener, but if you want me to ask it now, I'll just ask it.
Yes, please.
Right. On paragraph 1.24, it states, it's all about sampling and so on. It states that the data used for PAYE include all income types and do not exclude tax from savings and dividend income. How safe is that? I mean, we're doing a calculation here which is pretty important for estimating Scottish income tax revenue, but Scottish income tax revenue does not include dividend income or savings income. How is this distortion? Because the predominant value of that will be south of the border. What is the methodology for making this valid and relevant for the Scottish rate of income tax?
Darren, would you like to come in on that?
Of course. So I think it's not for me to kind of advocate for HMRC here, but I think what this touches on is one of the inherent challenges of producing a complex estimate like this, where you have multiple data sources, high volumes, complex estimation techniques and uncertainty. And I think the choice in HMRC's respect is how far do you disaggregate that data in applying it in the methodology. I think in this respect, because it actually includes all types of income, including those which aren't directly relevant to Scotland, or certainly the calculation of Scottish income tax, then that would actually have a beneficial impact in kind of broad terms in the context of the estimate. I think the only other thing I would say in that respect is that when it comes to calculation of the outturn, which is ultimately what is compared against the Scottish budget and leads to the reconciliation differences that we described earlier, that is based on the actual position. And when those reconciliations are done, which is why the outturn is calculated a year in arrears, it is based on the actual position and to a pretty high level of precision. I think 90% is the number that we calculate in the report.
Okay, thank you.
Graham Simpson.
Thank you, Convener. So I'll start off with a question to Gareth Davis, if I may. And this is on the accuracy of records of addresses of Scottish taxpayers, which you mentioned in paragraph 11 of your report. And you say that matching records couldn't be identified for 21.2% of Scottish taxpayers, 1.1 million records. So does that mean, and I hope it doesn't mean this, that more than a fifth of tax codes could be wrong? I assume it doesn't mean that.
No, it doesn't. And the essentially that's the kind of first figure that they came to when doing a straightforward matching of address information, postcode information held by HMRC with other sources. So if you like, that's the kind of initial long list of queries that need to be addressed. Then later in the report, we set out in more detail how HMRC worked through that long list to boil it down to areas where there appeared to be genuinely inaccurate information or missing information. And if you follow that train down, you come to a much smaller number of genuinely incorrect or missing postcode information. So yeah, it shouldn't be taken to mean that very large percentage is not correct.
Okay, so what's the number now?
I think I might struggle to find the table, but I think 350,000 still required further work, and then when they got to the number of records that needed to be that were clearly in error or missing, it reduced from 61,000 the previous year to 31,000 this year, so roughly halved. Which still means there's quite a few that weren't accurate, but with obviously people moving house and address changes of that kind, there will always be a level of turbulence in the data. But that gives you a kind of at least a sense of the scale of the remaining amount to be corrected.
So you think it's around 31,000?
Where it wasn't possible to match, and there were evidence that it was out of date or incorrect. Yeah. So now that. Clearly 31,000 too many, but given, as I say, a fluid population, and you're always going to have some changes in the data. What we say in the report is that HMRC hasn't identified what a acceptable number would be to regard the system as being fully compliant, because it would clearly never be zero. So we're just pointing out that they haven't yet set that number.
So given that there's no legal requirement to tell HMRC if you move, I mean, how easy is it for people to, fiddle the system?
It's getting harder because of the availability of accurate data matching techniques. So it is much more of a challenge now to keep your accurate address from HMRC than it would have been a few years ago because of enhancements in big data analytics. But it will always be a challenge, and the reason we kind of emphasize the point in the report is what referring to what I said earlier, that if the difference between the tax bands and the rest of the system in the two countries continues to diverge, then there may be more risk in this area. So it becomes a higher priority to have a completely accurate database.
Yeah, I suppose that goes back to the question that Colin Beattie asked earlier about the sort of behaviour of taxpayers. So I suppose if it's going to pay you to lie about your address, then if it's easy to do that, you may well be tempted to.
That's right, and so I think this area of compliance activity is one that HMRC, it already is treating it as a high priority area. The pandemic has meant that for a lot of its compliance activities, certainly not just this path for the Scottish income tax calculation, but for all of its compliance activity, HMRC has had to direct some of that resource to other areas such as the furlough scheme and so on this year. So there may be a kind of 1 or 2 year impact of the pandemic on this work by HMRC. But as things stabilise, I think it'd be really important to bring this back into focus and to understand, is there any evidence of changing behaviour here, and what implications does that have for the required level of compliance activity?
All right. Initially, it was reported that 45 MSPs hadn't been given the Scottish tax code for 2019-20, which seems extraordinary. If a member of the Scottish Parliament hasn't been given a Scottish tax code, any idea how that came about?
I don't. That was in last year's report, wasn't it? We obviously, I followed up. We followed that up this year, and HMRC have strengthened their, not surprisingly, strengthened their checks on exactly that point about Scottish parliamentarians and whether they have a correct Scottish code on their tax code. And so they now have a specific manual process to ensure that that's the case, which did operate successfully in the year that we were auditing here. We noted in the report that they've since automated that, because clearly kind of having a separate manual process carries some cost. We'll be checking next year whether that automated version is delivering the same level of accuracy.
Do you know what the figure is now?
Well, I think it was 0 in the year we checked, but let me check with Darren. Darren, is that correct?
This was a specific area of focus for this year's report, and based on the work we did and the inquiries we made of HMRC and our Audit Scotland colleagues, actually, there weren't any further instances, and that's what we would expect given the level of scrutiny applied to it through the previous year and previous report.
Did you ever look at MPs who represent Scotland for a similar figure?
Yeah, they're included in the, when we say Scottish parliamentarians, it's MSPs, MPs for Scottish seats in Westminster, and actually in the year that it related to MEPs as well.
Oh, okay. I've just got one more question. I don't know who'll know the answer to this, but one of the tools that HMRC was looking at was postcode scans of taxpayer records. Can you tell us anything about that? How that works?
Darren, do you want to say what we know of that process?
So there are a number of different aspects to this. So the HMRC apply a kind of a multi-layered approach to ensuring the completeness and accuracy of the Scottish taxpayer base, given that is the fundamental risk to accurately determining the level of revenue. So the third-party data verification exercise we've talked about, the postcode scan aspect of that is essentially interrogating their own records and comparing against different sources of information they have across the different systems that they maintain, so the pay-as-you-earn system, the self-assessment system. There is a control that sits a level above that, where they annually look at the ONS record of new postcodes to make sure that their kind of baseline list is complete and that they're accurately benchmarking the taxpayer records they have against the ONS database. But hopefully that's helpful in giving you a little bit of context.
Okay, thank you, convener.
Thank you. Neil Bibby, please. Do we have Neil Bibby? Broadcasting, is Neil with us? Okay, I'll maybe come back to Neil in a minute. Bill Bowman or Alex Neil, did you have any questions for Bill Bowman, please?
Yes, thank you, convener. Good morning. We've been speaking here about errors, adjustments, areas of focus. Now, you know, a timing difference may be a nuisance to manage, but at the end of the day, it'll catch up. Which are the areas that have the potential for the biggest absolute gain or loss to the Scottish finances?
Would the Auditor General like to pick that up?
Thank you. Thanks, convener. Good morning, Mr. Bowman. I think, I'm sure like members, we've been closely following the events of last week for the Scottish Budget, and particularly the Scottish Fiscal Commission's assessment of the estimates and the likely impact, the unescapable impact of the COVID-19 pandemic has had on the projections for Scottish public finances. What's clear from that report is the level of volatility that remains in the system, and the challenges of making reliable estimates. We've seen volatility in the past, the estimates, the tax take and the subsequent reconciliations, but I think it feels like an ever more so set of risks currently. And I think it's borne out, Mr. Bowman, when you look at some of the numbers. I've just pulled the correct figures, see that the SFC's forecast for 21-22 is now a reduction of £634 million in income tax, also signalling that the conditions have been met for a Scotland-specific shock. But yet, even allowing for that context, that there's an anticipation that this will bring additional budget as the way that the Barnett consequentials on the block grant adjustment flows through, that will result in a positive reconciliation at some point down the line due to the divergence between the Scottish Fiscal Commission and the Office for Budget Responsibility assumptions. Hopefully, I think for us, Mr. Bowman illustrates just the sheer volatility and complexity of the system at the moment. But I just maybe pause for a minute and see if Mark Taylor wishes to add anything about kind of what we're seeing, I think in most particular what this means for the Scottish budget.
Thanks, Auditor General, and thanks, Mr. Bowman, for your question. Just a bit of a technical point, but speaks very much to your question of timing differences. And normally in an accounting system, those do correct over time. I think what's interesting in how the system works here is that once the outturn is struck, that's it, and that year's over and done with. So some of the things that are based on estimates within the outturn are wholly based on those estimates, and when the actual figures come in the future, it's not self-corrected for those figures in a way that you would expect in a normal accounting system. The best way to get a handle on that is if you look at figure 2, which just comes before paragraph 1.5 in the Controller and Auditor General's report. You'll see the amounts in there that are estimated. Now, we don't have information, there's no information available about how out those estimates ultimately are, but it's those areas when the actual figures are known, maybe up to 6 years after the outturn struck, that those figures are fixed and you don't get that self-correction, and therefore the Scottish budget is fixed at that point. Those might be overs, there might be unders. We don't have the information. That will not resolve itself. But speaking to your question about how those timing differences work, it's those estimates that are baked into the outturn that where that risk is. I think it's fair to say, and colleagues might want to say a little more about this, with COVID, there's likely to be more estimation. There's longer available to taxpayers to complete their tax returns, and there's greater estimation likely and greater risk in how HMRC might put these figures together in the future. And I guess that's where the risk the Scottish budget might come through. Importantly, that can go either way, and we'll never get a true sense of the extent of that given the way in which the outturn process and the outturn system works.
So are you saying then, thanks for that, the estimates are effectively actuals in the calculation, in the sense that they are fixed?
So, yes. So in the calculation of the outturn, yes. To be absolutely clear, in the calculation of the provisional estimate for the 1920, those figures don't affect the Scottish budget at all. But in the calculation of the outturn, the figures that are estimated in figure 2 of the Controller and Auditor General's report, those are fixed at that point and based on those estimates.
But we have an opinion on those estimates in these reports then, do we?
So the overall assessment that the Controller and Auditor General makes about the figure for the outturn includes an assessment of the reasonableness of the estimates, and I'm sure colleagues would be happy to speak to that.
We maybe just ask him now then that he's comfortable with those. I can't hear you, sorry.
Thank you. That's a good summary of the report conclusion on that point, that we've checked the methodology that's been we've concluded that that's been calculated.
Sorry, I didn't. Your microphone went off there. Just could you think you could say that again?
Yes. So we've checked the estimated part of the outturn in the way that's just been described, and our view is that that's been calculated reasonably and in line with the agreed methodology. I think the point I would just add to the previous comments is I think this is obviously this needs to be a live discussion between the Scottish Parliament and HMRC because more accuracy on some of these points, or being able to go back and, for example, check whether the estimates used in the outturn calculation were subsequently adjusted. They will be additional processes in HMRC, so there will be a resource implication, and I think that's why it needs to be a dialogue continuing between Scottish Parliament and HMRC on what level of accuracy is required here, and what resource is necessary to achieve that.
Thank you. That's helpful, Convener.
Okay. I'm now going to Neil Bibby.
Thanks, Convener. Good morning, panel. One of the compliance risks that's been identified is the hidden economy where income is not declared. I understand that will be difficult to quantify, but given this, how can we have confidence that there isn't a Scotland-specific risk in relation to the hidden economy, and what estimates, if any, is there about untaken tax in regards to the hidden economy?
Through this concept of the tax gap that HMRC uses to calculate a UK-wide tax gap, we regularly review the methodology that HMRC is using to make that UK calculation, and we report to Parliament in the UK on that on a regular basis. Actually, our view is that HMRC has a strong approach to this, and one that it continually seeks challenge on from academics and others with an interest in the reasons why you don't collect the tax that's legally due from everybody, including the hidden economy as one of the big sources of that gap. Actually, the tax gap UK-wide has come down slightly. The answer to your question about are there any estimates of this, it's around about 5%. In other words, if we could identify all the tax due that should have been collected in the hidden economy and other ways of people avoiding paying what they should, it would be about a 5% increase in the tax take. Now, the question about is there a specific tax gap calculated for Scotland, we address in the report, and we note that there isn't. HMRC, their methodology for calculating the UK tax gap doesn't allow them to disaggregate that to the 4 nations, and the Public Accounts Committee in the UK Parliament made a recommendation to HMRC that they consider whether they could move in that direction and specifically focus on Scotland. HMRC's response to that recommendation was their resources and methodology at the moment don't allow them to do that, and they don't have any immediate plans to try to do that. So I'm sure that will continue to be a dialogue between the UK Parliament and HMRC, and clearly, the committee may have its own views on that as well. But at the moment, the HMRC are saying they don't plan to calculate a Scottish tax gap because their methodology doesn't permit them to do so.
Okay, that answer's helpful. Thanks very much. Just on the hidden economy, obviously the cash-only economy is a significant part of that. Has there been any estimate on the impact of that in relation to COVID?
Well, not specifically, and certainly not with I certainly can't help with a Scottish estimate on that. But I think the committee may be interested in some work we've done UK-wide on cash in the economy, specifically actually as part of our audit of the Bank of England. The kind of clear trends through the pandemic have been reduced use of cash. Lots of retailers insisting on card transactions in the first phase of the pandemic rather than cash, for example, and just lower economic activity as a whole. So the cash authorities have been responding to that and trying to ensure that people who do still rely on cash are not disadvantaged by that general decline in cash use, and particularly if it's becoming difficult to use cash for essential purchases. I think that's a big concern. So I know that's not quite the focus of your question, but I think there's certainly a focus on the impact of the pandemic on use of cash, including the impact on the hidden economy and any lost tax as a result.
Okay, thanks for that answer. Thank you.
Okay. The members have any? Got Alec Neil. Is Alec with us? Alec, are you there? No, he is not. Right. Okay. Do members have any further questions for our witnesses this morning? Can I thank you all very much indeed for your evidence and for joining us in this virtual session. I'm going to now close the public session of this meeting as we move into private. Thank you very much.